Let's discuss the markets with Wells Fargo Investment Institute Senior Global Market Strategist Scott Wren. Scott, great to see you. My first question is whether there's any sector there in the S&P 500, in your eyes, that's very cheap and attractive right now.
Well, Wilford, certainly technology isn't cheap, and we've trimmed from that a bit. But you know, the sectors that we've been looking at, things like industrials, materials, that benefits from the data center build-outs. We've liked energy. Anytime that energy hasn't performed great over the last couple of months, but anytime oil gets down near 70, we don't think it's going to trade below that. We've liked energy. So you know, we've liked communication services here. We lightened up the first time the market ran up towards these highs in that particular sector, but when it traded off, we tried to boost our exposure there. So I think there's some sectors out there that we have interest in. I don't know if I would call any of them cheap, but on a relative basis, I think there's some things to be interested in.
Well, talk to us about communication services now that it is back up to those sorts of highs, and we have some of those seasonality questions as well. Are you taking profits?
You know, we still would recommend trimming. I mean, if you're, you know, the weighting in the index is pretty high. Obviously, it is in technology. We'd say trim from that particular sector, get down to your 32% approximately where it is. Communication services, we're not trimming right here, so we still like it. And you know, clearly you have to have some exposure and a little bit of overweight exposure to some of these more growthy areas. And of those two sectors, and I guess you could throw consumer discretionary in there as well, communication services is the one that we like the most right now.
Hey, Scott, you mentioned the energy trade, and it's been, you know, quite a trade this year, just thanks to this insatiable demand from the mega caps and their energy needs to develop generative AI. You even had Amazon, you know, picking up a nuclear-powered data center. Do you think that there's more room to go here, or do you think that ultimately it's going to be hit by the same kind of concerns about capex and how much the mega caps are going to continue to spend into 25 and 26?
Yeah, Deirdre, I do think there's going to be some concerns here, but as far as the overall broad energy sector goes, you know, we're going to see some quarters slow down. This is probably the high quarter, the read we had today on GDP. That's going to be by far the highest one over the course of the next, let's say, 2 or 3 quarters, or maybe another quarter beyond that. But you know, there's a shortage of not only fossil fuels for the long run, but also energy just to power all these data centers. And if you throw together energy, materials, and industrials, those, you know, for us, part of it is that AI play. And just like a lot of technology, when things are new, it doesn't really make a lot of difference whether the economy is going up or down. People want those. They're going to build out. They're going to need copper. They're going to expand energy grids. So I think there's a little bit of resilience there. And energy, I think, has had a little bit of a tough time because, you know, the global economy is slower and the U.S. economy is going to slow. But we want to pick up and increase our exposure to energy when we see this underperformance, and certainly anytime we see oil down near $70 a barrel.